In this video, I discuss the current price of gold and predictions as to what might happen with gold prices in the next 2 to 3 months. We actually appear to be setting up for a massive breakout in the price of gold. I also cover gold news and why cryptocurrencies and precious metals could be massive for 2021. Hello everyone, it's Sajad. I hope you're having a fantastic week. Let's discuss gold news and general precious metal news first. So what we're seeing in the news at the moment is a retrace in the price obviously of silver and of gold over the past couple of months. At the same time, we're seeing cryptocurrency like Bitcoin especially exploding in terms of its price. Now this creates an important kind of issue for us because if you're looking at these types of assets as a store of value or a store of wealth, then what do you do here, and why is silver and gold going down but cryptocurrency in the opposite direction? You can see here on this chart that we've actually broken the 100-day moving average in terms of support. But as I'll show you in the chart in just a moment, I don't really rely on moving averages that much. Apparently, according to a US government report, money managers increased their net long positions in gold futures just a few days ago, just last week. And they also increased net bullish bets on silver for the 5th week of 6. We also saw that Russia for the first time is holding more gold than US dollars in terms of $583 billion reserves. Now this is as of the end of June, but it made up almost a quarter of their central bank's stockpile. You can see on this chart the trend going back the last couple of years, and actually this trend wasn't just happening through 2020, it actually began all the way back in 2018. I also wanted to touch on one other thing, slight tangent here, but the main issue, the main reason people are turning to precious metals and cryptocurrency is now a store of wealth, because the issue we're having at the moment is due to all of the money printing by central banks, which doesn't have any limit. They have full control over that. We don't really have any say. But you have to remember that we're being affected by this. Every time they do this, and there's been asset inflation for many years and this continues to be the case. So compared to these assets, like for example houses, our currency is being devalued. And things are so ridiculous now in 2021 that you can see here, people in Denmark, they're getting 20-year 0% mortgages. Now, I mean, this is nothing absolutely new for Denmark. They've actually lived in negative central bank rates for a long time. But when we talk about countries like the UK and the US possibly switching to negative interest rates as well, this is the direction we're going in and the direction central banks are taking us. And you can see here, this is one of the key issues. Negative interest rates, they turn everything upside down. So savers have to pay interest for banks to basically hold their cash, and borrowers are paid interest as an incentive to take out loans. So almost the new asset in 2021 is debt, not cash. And do you think central banks are going to do anything about this or try and reverse this? Of course not. We're a debt-based economy in the Western world. So they want people taking out as much debt as possible, more consumer spending. This is how everything continues, and the actual debt, for example, that the US hold doesn't have such a negative impact. So basically, in essence, they're inflating away the debt. So as we get onto the charts here to discuss some technical analysis, just keep all of that in mind. The big question for me isn't whether you should hold various types of assets. I think the answer to that's obvious. The question is, which additional market should you look at, because some of these markets are just so manipulated, and that's always been a concern about gold and silver. Now there's something I spotted in terms of technical analysis, so we're going to have a look at that now. But first of all, let's drop to a daily chart and we're going to have a look at the moving averages first. Just before we do that, if you're new to the channel, make sure you're subscribed and turn on your bell icon. That way you get updates on all new videos I put out. I do regular updates on precious metals, cryptocurrency and the wider stock market. So the two moving averages I have on it at the moment are the 50, the red line, and the 200, the orange line. What I always like to do is backtest just to see whether these actually were important in terms of support and resistance. So here I can go right back to the peaks we saw in 2011, and then from then onwards you can see here, particularly the orange line, the 200 moving average, a couple of times in 2016, 17 and 18 we got above, then broke back down, but since we've had this upwards trend, we've spent very little time below. In fact, if you go into a weekly weekly chart, I'm not even sure if we closed below. And you can see here we were underneath back in March briefly, but then since then we've been above, and now we're at that same level again. We're breaking below the 200, but also it's the cross, the 50 and the 200 cross, which is a concern. And remember, that can be a lagging indicator. I wouldn't read too much into that, even if it did cross, to be honest with you. I don't think that means necessarily the trend has reversed. Just to show you an example of that, back in 07, 08, you can see there the 50 crossed over and then back above again in this longer term bullish gold uptrend. That's why I don't think that's particularly important. Now, what I'm looking at here, I've been looking into the structure of this move down in some detail, and what I've noticed is it does all appear to be corrective. Now, you could say that ended here on the 30th of November. That was the end of a correction and we're beginning a new impulse up. But if I drop down to a 4-hourly time frame, what I can see here from that 30th of November low, which was around the 1763 level, since that move up, this move here is this impulsive. And that's why I've drawn this as a guide. So especially in Elliott wave, for impulse wave, we're looking for a 5-wave swing. And I can see possibly 5 swings up, but the third cannot be the shortest. So we know that 1, 2, 3, 4, 5, that can't be the case. That cannot be the middle and the shortest. Another way potentially to look at it is we had a smaller one here and then we had a more extended wave 3 in the middle. But again, there's just too much overlap. The important thing about this middle wave here, and I'll just draw that for you now, is it's also got a subset of 3 swings up, so basically 5 waves altogether. But number 1 and number 4 cannot overlap in that middle swing. That's why I think this is also corrective moving up, which means we're going to have another move down, which is why there was no surprise we began to get that move down. But where do we go from here? Well, let's discuss that, because the other thing to notice here is that we're in a nice corrective channel. So let me just zoom out, and you can see that I've drawn the channel from that peak we got around 2074. Ever since the 6th of August, yes, price has been trending down. We've generally had lower highs, lower lows, but this seems to be a corrective channel because that low to this high here fits in that same channel. So what might happen from here? Well, if this is still corrective, what I think is happening is we're actually now completing a final leg down, which is a Z wave. So not as common a WXYXZ move, but potentially that could be happening. So this final X to Z move, it has to be a zigzag, a 5-3-5. So we might be getting that first 5 complete and we might get another push down. But once that's done, there's a very, very important buying area that I'm looking at. And you can see I've actually drawn it here. And again, this is a risk reward trade, but if that's the completion of this correction, this kind of sideways and downwards flag, then that's a buying opportunity in my opinion. And what I'm looking for from there is a continuation of this uptrend. Potentially, if that is a 4th wave move down, then we could be seeing a 5th wave up. And the key level I'm looking at is the 1750 level, which is a very important level for gold. If we swing right back again to the last time we saw prices around that region, which was 2012, 2013, you'll see it was an important level of resistance, which now potentially could become support. It wasn't really tested since we broke out back in July. So you'd expect that to be a retest anyway. So that's an area I'm looking at. And you can see here, we had support around this second line, so the 1690 level. So we've had support there previously and it was resistant. So that's where I would put my stop. So I would put stop around 1685, something like that, and then see if we get that final little leg up. It can absolutely break down from here as well, but it's been very difficult to trace out 5-wave moves to the downside in this kind of sideways channel at the moment. It's still possible, but I think it's now looking less likely. By the way, if you want step-by-step guide of how to create your own setups, how to do technical analysis, how to look at wave structure, how to use technical indicators like, for example, the RSI, moving averages, the MACD, etc., then I have a promotion on my training program. It's the first link in the description. Use that coupon code on checkout and you'll get an extra 60% off at the moment. Finally, the other thing that's good to see here is we're getting reducing momentum at the moment, which can indicate potentially an eventual breakout. Not now, but in the next few weeks. That's what I'm hoping for, a grind down in price and then on a lower time frame, some divergence in RSI and MACD, and that will be the setup for a move up. That's what I'm looking for. Let me know in the comment section below what you think is going to happen with the price of gold and silver. I'll do another update on the price of silver very soon as well, and the S&P 500. Thanks for listening.